joint venture accounts, illustration 1. Selena and Paul enter into a joint venture. They both supply materials and sell the finished products. Profits are to be shared, Selena a half and Paul a half. So they share profits equally. Materials supplied, Selena 3.4 million, Paul 2.9 million. Wages paid, Selena 800,000, Paul 1,150,000. Paul paid warehouse costs 315,000. Paul paid delivery costs 199,000. Other selling expenses paid, Selena 238,000, Paul 307,000. Cash received from sales, Selena 6,780,000, Paul 5,220,000. So those are the transactions. The joint venture of two, Paul and Selena. They share profits half-half. So they share profits equally. What are we required to do? Of course, however, by the end of the year, products sold by Selena worth shillings 200,000 had been returned by a customer because they were expired. A commission of 2% on products sold during the period is entitled to each. Required to prepare the entries related to the joint venture, the books of accounts of Selena, and in the books of accounts of Paul. Then you're also required to come up with a memorandum joint venture account. So let me take you through this and you see how we come up with joint venture accounts, how would we close them off, and then how would we come up with a memorandum joint venture. So that's our question. And go through it again. Then we see what to do. We have the books of Selena and the books of Paul. So in the first part of the question, we prepare what we call a joint venture account in the books of Selena and in the books of Paul. Let's see how we can do this. So this is part A of the question. So I will simply say in the books of Selena, I'll say in the books of Selena, this is the first thing I'll do. The books of Selena. The books of Selena, we have to prepare what we call a joint venture account. Joint venture account with Paul. Joint venture account Paul. So how much are in shillings? We have to show that. Joint venture account Paul. All right, so let's see how we can do this. Let's see how we can come up with our joint venture account in the books of all right, so the first thing we can look at the purchases, the materials, the materials purchased. We know very well that Selena purchased goods or materials worth how much? 3.4. So we enter this in the books of Selena, 3.4. So we have that. Then you also see that Selena paid, Selena paid, is it Selena? Yeah, you also see, let us check again and see what else Selena paid. Selena also paid wages of 800,000. Okay. Selena paid wages. We can put cash, brackets wages, 800,000. Okay. Then what else? We also see that Selena paid other selling expenses, 238,000. Other selling expenses. This is cash. Cash in respect of other selling expenses. Okay. How much is that cash? That cash is 238,000. Of course, we have to get the commission, don't forget. Cash, brackets commission. We have been told that they are entitled to commission of 2% from sales. So the sales made by Selena, that is 6,780,000. So we have that as our commission. Then what else do we have? We have returns. Have some returns that Selena sold goods, but 200,000 goods worth 200,000 were returned by the customer because they were expired. So we debit Selena's account with the goods that were returned. So we say returns with the value of the goods that were returned, returns 200,000. So that is Selena's account. That's what we debit. Then on the credit, of course, the credit we write cash. That is cash from sales. And the sales we know is 6,780,000. That is the cash of the sale of the finished products by Selena. So that is Selena's account. That is Selena's joint venture account. So that's what we have. But of course, you also need to look at the other accounts. We have to look at in the books. Let us look at in the books. In the books of Paul. The books of Paul. Let us try to see what happened in the books of Paul. Still, you will have to come up with a joint venture account. You have to come up with a joint venture account. So joint venture account. This time around, we're in the books of possible joint venture accounts with Serena. Joint venture accounts with Serena. Joint venture accounts. Serena. So you enter the transactions of Paul in this account. We're in the books of Paul, so we have to enter all the transactions. Paul. One by one. So we still have the purchases. That is the purchase of the materials. Paul paid 2.9 for the materials. We have cash that was paid in respect of the wages by Paul. That is 1,150,000. Have the cash. This is for the warehouse expenses, warehouse costs. When I take you back, you'll see that Paul paid warehouse costs 315,000, then also paid delivery costs of 199,000. So we have to enter this in our account. So warehouse costs 315,000. Then we also have the delivery costs, still cash. Delivery costs, that is 199,000. Of course, don't forget the commission. We have been told that commission is 2% times the sales. So cash received from sales, homemade sales of 5,220,000. So we need to get a commission that is 2% of 5 to 2. So that is our commission. Then what else? No returns in the books of Paul. Paul's account will be credited with the amount of sales that were made. So cash, bracket sales, homemade sales of 5,220,000. So credit that. So this is what we have so far. This is what we have so far. What we have so far. So these are the two accounts we have. And the entries shown above are entered using the basic double entry principles. Of course, you'll see that in Serena's books of account, there will be a credit entry in the purchases account in her general ledger of 3.4 million, simply because in the account we have debited. purchases in the joint venture account. We have the purchases. So there will be a corresponding credit entry in the purchases account in Selena's general ledger. Of course, there will also be credit entries in her cash books. In her cash book for the 800,000 for the wages, then the expenses as well, and then the commission of 135,600. Then of course there will be a debit entry in the cash book for 6,780,000. So you see, we are just using the basic double entry principles. Of course, the same in the books of Paul. This is what we have. So in the corresponding accounts, there will be credit and debit entries. More so in the cash book. So that's what we have so far. Now we have to close off these accounts, but before we close them off, we have to prepare what we call a memorandum joint venture account. I told you that the memorandum joint venture account is normally prepared to find out the profit that has been earned by the parties in their own venture accounts. After coming up with that profit, then that profit will be transferred between the parties to draw the venture to a close, as we are going to see. So what we are going to do, we are going to prepare a memorandum joint venture account. That account that combines these two accounts. So this is now memorandum joint venture account. You can say Selena and Paul memorandum joint venture accounts. Okay, Selena and Paul memorandum joint venture account. So that's what we have. Shrinks. Yeah. So what you will do, you have to just copy all this to debit. All what is on the debit will be debited, and then all what is on the credit will be credited. I can start with the sales. Start with sales. Sales. Sales, we have Selena. Selena's sales amount to 12 millions. Is it 12? Sorry. Selena's sales amount to 6, 7, 8. Okay, 6,780,000. That's the sales of Selena. Then you also have Paul with 5,220,000. Those are the sales of Paul and Selena. So we enter them in the Memorandum joint venture account, the credit. Then on the debit, I write purchase of materials. Purchase of materials. You simply add the purchase of materials for these two parties, Selena and. So I get this plus that. To add, get 6.3. Then the wages, you also add the wages for the two wages. add this, start, get that. Then the warehouse costs. Warehouse costs. Who paid the warehouse costs? It's only Paul, and that is 315. 315. Then we also have the returns. Seller sold goods, and part of the goods were returned. So this is returns. Returns of that. Then we have the selling expenses. Selling expenses. What's the selling expenses? Selena. Selling expenses. Then we have the delivery costs. We have them, delivery costs. Delivery costs. How much? Delivery costs 199,000. So have that also. Then what else? Selling expenses, we have delivery costs, we have warehouse costs, that. Then the commission, so bring the commission. You add the commission for the two, it's this. That's that. So that's our commission. So all the debits have been credited, and then all the credits have been credited. All the debits have been debited, and then all the credits have been credited in the memorandum during the account. So it's just a summary of the information in the other. How many entries do we have on the debit? 1, 2, 3, 4, 5. Okay. So that's what we have. On the credit, we only have the sales. Now we have to find out the venture profits. Let us try to find out the profits. How much profits have they made? How much profits? Venture profits. Venture profits. Which profits have to be shared? Selena. This is Selena. Selena 4. So how do we get the profits? Let's try to find out how to get profits. Of course, we have to add both sides. We have to find out which side is bigger. So the total sales figure is this. Then you also have to put this here, because in this case the credit exceeds the debit. The credit side is bigger, so there will be a profit. There will be a profit. There will be a profit. But how much is that profit? So that profit has to be shared. The profit has to be shared. So let's first find out the profit. My profit will equal, this is our profit. Let's first find out how much the profit is. So that profit will equal to the sales minus the sum of these expenses. So our profit is 2,558,000. That is the profit. 2,558,000. So the profit has to be shared. Selena gets a half of the profits. let me just, okay, 0.5 times this, that gives us that. Then Paul also gets 0.5 of this, which gives you that. So that is your memorandum joint venture account. And from this account, we see that the parties have made profit. The profit made is 2,558,000, and the profit has been shared according to their ratios, that is half, half. So that is our memorandum joint venture account. So now what we have to do is to balance off the other accounts one by one. So what you do, just come in Selena's books, so share of profits, These profits, you transfer them from the Memorandum joint venture account, you copy them and paste them there. Then you also go to joint venture account with the Selena in the books of Paul. You write share of profits. How much is the share of profits? 4. So now what you have to do is to balance off these accounts. You can start with Selena's books. Let's try to find out. So this is our total. Of course, the credit side is bigger, so I'll make the two sides equal, but there will be a balancing figure which we have to find out. So it's that minus the sum of all these. We are trying to come up with a balancing figure, and the balancing figure is 727,400. That is the balancing figure in this account. That is the balancing figure in this account. And of course, now this represents the cash. This represents cash to be paid to Paul. Because it's not a profit, you already have our profit. So meaning that Selena has some extra cash which she has to send to Paul. Okay, so cash to be paid to Paul. Let us record that. So come here, write cash received from Paul, from Selena rather. Cash from Selena. That's how much. That's that. Then after you balance off this account, and I believe this account will automatically balance. When you add this to this, get that. When you sum up all these, yeah, so that is our account, the books of Paul, balancing very good. So now you can close off. So that's it all. That's how you enter the book, and that's how you enter the transactions in the books of parties, joint venture account. Of course, practice is very, very key. You have to practice. This is something very easy with practice. So follow this video, then try out the other questions in the past paper questions. Yeah, thank you for watching. Thank you for subscribing. Don't forget to share with those other friends. Bye. Bye for now.